US stock market seems to be taking a breather just before the Fed releases its interest rate decision and while the earnings season is ongoing. In this report, we are to discuss the earnings schedule in the coming few days, how the Fed's interest rate decision could affect the markets, what's coming next, and for a rounder view, conclude with a technical analysis of the S&P 500. The US equity market this week seems to be focusing on the Fed's interest rate decision due out later on today. The bank is widely expected to remain on hold, and we tend to concur given also the Fed's fund future imply a probability of 98% for such a scenario to materialize. Yet the market also tends to expect extensive rate cuts within the year, hence there is a large question mark looming over the Fed's intentions and thus the tone of the accompanying statement and Fed Chairman Powell's press conference later on. Overall, should the bank maintain a more dovish tone, indirectly reaffirming the market expectations for extensive rate cuts starting from May onwards, we may see equities getting some support as the looser economic conditions in the US may allow for more optimism for the outlook of the US economy. The current week is characterized by the earning releases of high-profile tech companies. Alphabet outperformed market expectations both on earning per share level as well as revenue level, allowing for a more optimistic outlook for the company to emerge. Yet worries are still present as the revenue from advertising tended to disappoint investors, with initial reports indicating that the share price was pushed lower at the after trading hours. We also note the company's effort in the AI sector, which is to be embedded in Google's products. Similarly, Microsoft also outperformed market expectations for its EPS and revenue figures. As in Google, AI seems to be a driver for Microsoft, as well as with the cloud division being an important segment. In the coming days, we will continue to get earning reports from mega-cap tech companies such as Facebook, Apple, and Amazon. Yet for anyone not interested in the tech sector, we will also note the release of the earning reports of Ferrari, Deutsche Bank, Merck and Pinterest on Thursday, and Chevron and ExxonMobil on Friday. We note as another big test for equities the release of the US employment report for January on Friday. The unemployment rate is expected to tick up to 3.8%, the average earnings growth rate to remain unchanged at 4.1% year-on-year, and the NFP figure to drop to 180K if compared to December's 216K. Should the actual rates and figures meet their respective forecasts, or be even worse, we may see the US stock markets gaining as the data may imply a crack in the tightness of the US employment market and exercise more pressure on the Fed for a looser monetary policy. S&P 500 edged slightly lower yesterday and during today's Asian and European session, yet the direction of the index's price action seems to continue to point towards the 4,950 resistance line. We tend to maintain our bullish outlook for the pair as long as the upwards trend line guiding it remains intact. Furthermore, we note that the RSI indicator continued to run along the radio of 70, implying a strong bullish sentiment on the behalf of the market, yet the RSI indicator may also imply that the index is still at overbought levels, risking a possible correction lower. Should the index find additional buying orders along its path, we may see the index breaking the 4,950 resistance line and thus open the gates for the 5,100 level. Should an intense selling interest be expressed by the market, we may see the index breaking the pre-mentioned upwards trend line in a first signal that the upwards movement was interrupted and the aim for the 4,800 support line. Lower than that, we also note the 4,660 support base. Thank you for joining us today as we navigated through the dynamic world of financial news. From all of us here at IronFX, we wish you solid trading.